dollars. That's what I understood. And he's giving us the same opportunity. 2010 to 2015, that would be 2040. $400, you never know what it will be. Then now there are all the other stories that have been shared, which is an inspiring afternoon. Are you inspired? And then the story of Wakiri, the story of the pastor, and the person who was celebrating their birthday. So as I start, my thinking is, if I'm to celebrate my 90th birthday, I'll celebrate it in 2077. I don't know, if you think about it, when will you celebrate your 90th birthday? But you guys have money, you appear young, so I'm assuming it will be in 2060. What you would want is to have the financial freedom, to have the means and the ability to be there to celebrate, not to rely on my young son or daughter to send me money when they remember. You can do the financial planning today to be able to achieve that. Secondary, like every other Kenyan, I think 15 or 18 in every 10 Kenyans have side hustles, meaning each Kenyan must have more than one side hustle. These side hustles give us a PhD in how to burn money. So most of them are not profitable. They just teach you lessons of life. Some are successful, and you diversify the risk. So I'll take you through what we do as Entamri. Yeah, just go to the next slide. So there are a couple of thoughts that go through my mind as I sit here. What would happen if I had a career earthquake, if something didn't go very well? How will I sustain my lifestyle? How will I sustain that of my family? How else can I make money while I'm not working? How else can I achieve freedom? The freedom to do what I like, when I want, with whom I like, at whatever time. I'm not there yet. That's why I'm here making this presentation. Ideally, I should be in a cruise ship or in Bahamas or playing golf, but I have targets to meet, so I have to tell the story. So how do I create passive income? And I think that is what could also be going through your mind, to be able to generate cash as I work. So I'm assuming I'm speaking to a lot that is of savvy investors. You've invested in US government bonds. You have invested in US stock market. You've invested in US real estate. You've invested in some index fund, and they're giving you a range of returns between 6 to 10%. But because we are speaking about investing back in Kenya, there's a huge opportunity to invest in real estate there, and it gives you a higher return than what could be here. Then that gives you a diversified pool of investment that can give you cash now and into the future, that can appreciate in value, and that you can that can serve me up to 2077 and beyond. So the other question that comes to your mind, does investing in real estate generate cash? Some have bought plots in remote locations. That may not generate cash. But the population in the country is growing. Agencies like the UN are expanding there. The middle class is also growing. There is demand for housing, and in demand for housing, people pay rent, so it can generate passive income for you. Houses appreciate in value, that I don't need to emphasize. And it provides you with security. You can hand over a tangible asset to your loved ones in future. What is driving this demand in real estate in Kenya? I think I've spoken to that, population and many others. Some of you here have kids, and the way you've looked at your kids, you think they will never go back to Kenya. It's highly unlikely that they will go back to Kenya. So should I be investing in Kenya? Ideally, because you have the advantage and you have the capital, I recommend you invest there. You can get the passive rental income, and anytime you're in that part of the world, you can also use those facilities and you can pass it over to the future generation. Who do I talk to tap into this opportunity? Of course, the preference is to talk to me and talk to Centamri, but there are many other developers who are good enough, but we happen to be the gateway to the best opportunities. Next. Okay, this one. So what is the most viable, because they're sharing knowledge, what are the types of real estate that are most viable in Kenya? As usual, the plots, those are gold. Following the plots is apartments, particularly 1 and 2 bedroom. Why? Today the population is at 53 million people or thereabout. The average family size is 3.5 based on the national census report, the Kenya National Bureau of Statistics. If you read there, the average family size, I think, is 3.5 to 3.8. I don't know why the point, but that tells you 51 million divided by that 4. We have 13.8 million households in the country, and the most popular segment is the 1 and 2 bedroom. If you invest in that category, there is high likelihood there is demand. Then there are bungalows and mansionettes sitting on 1/8, quarter of an acre. That's the market segment that you'll not struggle to get a market. Real estate is location, as you well know, and you're well aware. There are locations where you can develop and demand far exceeds supply. There are locations where you can develop and you don't get anything. The cost of building this building and any other building in any location is the same, but the rent and the value is different. So as you invest back home, some of the better locations that are highly sought after, to rivers, that side of Gigiri, have a higher rental than any other location. The question is, who will rent my unit? Because we are sharing insights of investing back home. Kenyans will rent your unit. From the data we have is 88.8% of Nairobi residents are tenants, meaning 9 in every 10 people you interact with in Nairobi are parents. So Nairobi has 1.6 million homes. We have a population of 4.6 million people. That report is found in the Kenya Basic Housing Report. It was published in 2024. So if you have a good home, a good house in Nairobi, highly likely you'll get a tenant. There is the UN, which I've spoken of. It's expanding. There are corporates setting up in Kenya. And as usual, people leave rural areas to come to Nairobi to get opportunities. Now you're in the US, Worcester. The only English word that is spelled in vernacular, I don't know. It's quite funny how to spell it. So how do you identify opportunities? You get those opportunities through speaking to experts like ourselves and many others and doing your research online. How do I compare? If I buy a home here, and I have another home in New York, I have another one in Dubai, I have another one in South Africa, and I have another one in Nairobi. Nairobi will get you a higher rental yield, dollar for dollar. Here it will be 6%, Nairobi it will be 8, 10, and even 12%. Are there people that can be trusted? Yes, there are many developers who can be trusted to give you good insights. So this is the mind of a Kenyan, all of us. You want to make money. How do you make money? You form a capital pool by saving money, so spending less than you earn. You need to start a side hustle that we said in every 10 Kenyans. So actually, every Kenyan has more than one side hustle. And you're hoping that will grow and it will change your life. And every Kenyan is a real estate expert. Do you believe you are a real estate expert? Every Kenyan is a real estate expert. So I'm speaking to a panel of experts. I'm just sharing insights. So your brain wires differently when we speak about real estate. So it can be financed. If you're wondering, can I finance my opportunity? You can actually finance it. Just go back. We as developers, particularly Centamri, we provide a payment plan that matches your cash flow. We've partnered with banks to provide you with financing, and you can actually earn your income in dollars. So some of our locations, rent is payable in dollars. Next. So I've said 9 in every 10 Nairobi residents are tenants, so there is a lot of rent waiting for you in prime locations. What you need to do is just invest and you enjoy your money passively as you sleep. I think that is the explanation of that slide. You can move on. Of course, in every investment, there are risks. There's a probability that you may invest and your money goes away. There's a probability that you may invest and there is no cash, there is no return. So you can avoid being scammed by working with reputable developers, working with lawyers, working with architects to validate that where you're investing is good. How do you secure investment? You don't stay in Kenya. The assets you own are registered and protected by government. The contracts you sign can be enforceable. And you can also do additional due diligence. As the developer done or have they done other projects? So the factors to consider as you invest, I'm here to share knowledge. First, do detailed legal due diligence through yourself, through lawyers, through surveyors, through experts. Check on the location and ask hard questions. Where does my demand come from? Work with trusted developers and management companies. Finance, check with the various financial institutions whether the investment you're making, the return is good, and also mitigate your risk through insurance and many other ways. Next. So not far from here, I want to share lessons of how to create passive income. I think south of here in New Bedford, which should be an hour from here, there's a lady born there. Her name is Hetty Green. She was one of the wealthiest Americans. She was born in 1834, and she passed on in 1916. But in 1900, she was worth $100 million. If you adjust that for inflation, that would be $5 billion. And those were many years back when I think women then did not vote. They did not have any rights, but she was an investor. And there's a book you can check on Amazon, The Richest Woman in America, and another one about the Witch of Wall Street or something like that. But she primarily invested in real estate, railroads, and bonds. And she regularly bailed out the government of New York. When she was asked about investment, and this is found in that book if you read it, she said, I regard real estate investment as the safest means of using idle money. Let a woman watch and see in which direction a city is going, develop and buy there. So it's a lesson that was used more than 100 years ago. It's still applicable today. You can check how the cities are growing. You have access to capital and you invest there. Common sense is the most valuable possession anyone can have. So as you invest, apply the best of judgment. And before deciding on an investment, seek out every kind of information about it. Before you invest in anything, get as much information as you can so that you make the best decision possible. Then there is another lesson I would like to share. This is from Psychology of Money, this book by Morgan. So the best thing that cash can buy you is freedom to do what you like with whoever you like. And the real wealth is the money that you don't see. And that is what gives you peace of mind. That is what can be passed to to your generation, to your descendants, and makes a dynasty out of your lineage. Thank you. Next. So I want to use an analogy of diaspora. It may have started 700 years ago or more, when people left Europe and they came to this part of the world. Then they saw the opportunity. they left Portugal, they left other parts of the world, found their way into Kenya. They discovered places that we say someone discovered Mount Kenya, or they discovered Kenya and named it. But what they saw is what could be done with that opportunity. You also left your village, your neighborhoods, and you came to this part of the world and discovered the opportunity. So now your eyes and your brain is open. You can take advantage of what you see here, the capital that you gain here, to take advantage of opportunities back home. It's been done for the last 700 years, and we can apply the same principles to invest back home. Next. Just carry on. So I've shared a lot, but I think I can request that you scan this QR code. We share this presentation, and we've also created an investor guide where you can get detailed insights of how to invest. I don't know. Is it visible? But your phones are not out. Okay, a few more minutes they scan. I'm also a salesperson, so I don't want to block an opportunity. Okay. Next. Carry on. So I think the question that I've seen and that I've been asked while I'm here, how is the economy? How are you guys doing? If I invest, is there a market to buy? So the economy is doing great, not bad. GDP growth the economy is growing. The inflation is quite low. We've done a chart from 2020 to 2025. The currency is stable. The business confidence is there, and there are challenges. But within those challenges that are there are pockets of opportunity. The opportunity is the assets are not priced. They are cheap. This is the best time to invest. The market fundamentals are there. The demand for housing far exceeds supply. And not many people are buying. So the best opportunity for you is to take advantage of the economy as it is today, to tap into the opportunities that are there, because there are solid fundamentals backing that. Next. In terms of the contribution to GDP growth, the top 5 are: one is agriculture, forestry and fishing. That's what anchors the bigger contribution. Financial services and insurance. Real estate is third. Then the rest is accommodation, transportation, and the rest. So you're investing in a key sector in the economy. And of course, everyone must come from home, and you must spend between 40 to 50% of your time in a day at home, which is in a real estate setup, and up to 90 or 95% of your time in real estate. You're either here, which is real estate, in the office, real estate, in a hotel, real estate, in the gym, real estate, in a bar, real estate, in a salon, real estate, you're at home or office. It's all real estate. So your time is spent around that, and you can take advantage to make an investment out of it. Next. So if we imagine, I don't know if you can imagine where you were 15 years ago. That was 2010. I didn't look like a customer. I'd come from school, so I was just an ordinary, but with a lot of potential. 15 years ago, you are there with a potential. Now, if you imagine 15 years from today, which will be precisely 2040, and try to imagine what will be there, the opportunities are great. So today is 2025. We are close to 55 million Kenyans. In 2040, because 2045 we predict to be at 70, maybe we'll be at 65 or thereabout. So between now and then, there will be an additional 10 million Kenyans who need to be housed. If the family size remains the same as 3.8, let me round off that. 10 divided by 4 something has to be 2.5. Maybe 2.5 million homes are required, or 250,000 homes are required to house that population. If 10% of those are required in Nairobi, 9 in every 10 will be tenants. So I could say I want 2 or 3 people in that additional population to be my tenants, to pay me rent. So that's an example. The population is expanding, and there is a big opportunity for you to tap. There is investment in infrastructure. Nairobi is a regional hub. People are moving there. And there is an expanding middle class, and there is a lot of diaspora people relocating back or retiring there. Next. I think I've explained this. Currently, the annual demand for housing is estimated to be 250,000 homes to 300. But what we supply is just 50,000 homes, so there is a lag. Then the pent-up demand that is always there, and that has been documented for such a long time, is there is 2 million homes that need to be built to bring us to the same level, where the demand is fully taken care of. So for the next 10, 15 years, we may not be able to catch up with that, which creates an opportunity for you to invest. In Nairobi particularly, the demand for rent is very high, and the rental income keeps growing. So that's a solid fundamental that is difficult to recreate. There is an opportunity for you to invest. Next. Just insights. Real estate gives you a rental yield of above 9%, which is a good return. Next. I'll use a case study because I've been sharing stories. What have we done ourselves? With some projects at Two Rivers. In 2022, 2023, we are selling them off-plan. One of them was selling at 33 million shillings. This year, people are reselling those homes at 60 million. So someone has made 27 million passively. That's on the higher side. Then there is a Riverbank, which is an apartment. We are selling them for 15 million. And now people are reselling at 21 million. Zizi and Cascadia were selling at 14 million, and now the price is at 26. We've not finished construction. I have 2 customers here who are really happy with the units they invested in, and passively, before completion, they have made 12 to 15 million shillings. They may mention it to you, but that is the opportunity that is in Kenya. Next. That's the value uplift. Then there is the rental income. So for this unit that we are selling for 33 million, now the rent is 450,000 per month. Who is renting it? We're in close proximity to the UN, the diplomatic missions, the international companies that are expanding at Two Rivers. So they're getting rent of $3,000 to $3,500 per month. Riverbank, the unit we are selling for 15 million, the rent is $150,000, and actually $1,150. So the case study I'm explaining has actually been actualized on the ground. Next. This is now me in maybe 2050, when I retire. So people are about to retire, and this is statistics that we've seen from Retirement Benefit Authority, is after you retire, after 60 years, 47% of people depend on their relatives to survive. And those are people who are working. 31% So 31% continue to work post-retirement. Then 16% depend on their pension. And just 6% are the ones who are financially independent. You don't need to call anyone. You don't need to follow up on pension. You don't need to do anything. So I think the opportunity today is to plan for that period so that you're in the bracket of 6%, where post your retirement age, you don't need to be dependent on anything. You're actually the one, people are dependent on you. Then some of us retire and you start a business. The data that is there shows that 48% of businesses started with retirement money actually are not profitable. You already know a business that is not profitable, what will happen. The next stage, you might cross it down. Then 21%, the retirement goes, it pays school fees. You start and the way the side hustles also happen, your money, 1% run profitable businesses. So the opportunity is to start investing very early, compounding and enjoying that compound interest. And part of that investment could be in real estate, so that at the point you're 60 and above or you're retired, you can survive on your own without requiring any dependency on anyone. Next. Okay, so how do I finance my investment? First, to identify business opportunity, to identify your 10 billion. You separated the financing with the opportunity. So you first secure a good opportunity, you secure a good house, you secure a good opportunity in a prime location, and then you go looking for money. So if you've identified that opportunity, you can finance it two ways. You can finance it with your cash. So you say, I'll take a 24-month payment plan, or I'll finance it via mortgage. So at Centum Real Estate, we offer that opportunity that you can pay over 24 months, which is flexible to your cash flows. Next. Just carry on. This is due diligence process, but we'll share this with you. I think before you buy anything, just take as much time as possible to verify, check, recheck, get statutory compliance that wherever you're investing, the documents are there, they have approvals, they are not part of any reserves, and that what you also, you need to check that the developments are not part of a road reserve. They are not on a railway reserve. So the options that you have to finance, this I have to speak to again. There is mortgage. There is your personal saving. There is the loans you can get from the bank. There is diaspora remittance, which is a substantial financing. And some of you have invested as investment groups in back home. Next. Just carry on. I want to save time. Carry on. So there are certain risks, and this is normal as you invest. So there are 8 risks that we've identified for you and how you can mitigate them. One is the market volatility. Will there be a market when I invest? So the only way to mitigate that is just to take a long-term view on your investment and invest in prime locations. Is there liquidity? If I buy, will I be able to get my monthly cash? And when I want to sell, is there demand? Because you could have assets and then you struggle to sell. The only way is to be in places where there is high demand for either rental housing and where the occupancies are high, so that when you sell, someone else is prepared to buy from you. Construction, will the developer finish if I buy off-plan? Because if you buy at completion, you're buying at a premium. So you check the track record of the developer, you structure your payment plans based on how they are developing. The title and legal risk, is there a risk of fraud? Is there a risk of getting into disputes? So that's why I'm insisting on doing thorough due diligence and working with reputable firms. Currency risk, I'm earning my money in US dollars. I'm investing in Kenya shilling. I earn back in Kenya shilling. the thing depreciates. Is it possible that I earn my money in dollars in the US, I invest in Kenya shilling in Kenya, but I get rental income in dollars, which shortens the period and which mitigates my risk. So you can identify locations where there is demand for dollar-denominated rental income. Who will manage this property? How will I get my rent? And I'm in the US. So that's why you partner with developers who offer property management, and they manage your asset while you're away. Interest risk, for those who are taking loans, how do I mitigate that risk? Do I take a fixed rate mortgage, or which mortgage works best for me to keep the interest rate low, and can I prepay it faster? So just to introduce ourselves, that's our project in Uganda. The business was set up 58 years ago. We have assets under management in excess of 40 billion, and we've developed more than 2,700 units across Kenya and Uganda. Next. We've won some recognition. The business is a super brand. We are Edge IFC Edge Africa champion. So we've gotten some recognition from our customers. Next. What we focus on is the totality of your lifestyle. Live, work, play, grow, thrive, all the elements that encompass your lifestyle, and we want to enhance your productivity. You go home to a happy neighborhood, you go home to a happy family, you relax maximally overnight, the next day you're productive, and we contribute to the overall productivity of the country. You'll agree with me, your productivity during the day depends on how well you rested in the evening. Taking away any austerities that could be at home, but how you rested determines how well you're productive. Next. So this is not theory. This is Two Rivers. The ecosystem is already there. The homes, the shop, the work, the healthcare. So what you enjoy here in the US is what is on that other side, and maybe much better. Next. We give back to the community. We offer scholarships. We educate bright and needy kids from underprivileged families. We spend almost $1 million there. We have a desalination plant. We generate water and share with the community. And we create equal opportunities for people to work in. And the bulk of our team is Gen Z. Next. I know we focus on sustainability, but to simplify our sustainability, we want your water power bill. We want you to save up to 30% of your water so that the cost of owning that home and occupying it is cheaper for you in the long term. I've explained all this. We manage your assets, we correct your rent, we remit it to your account, and we get you a tenant. We give above market returns because of the premium locations we have. We focus on the lifestyle, so we create communities. People are conscious about their health. We want you to jog, we want you to run, we want you to enjoy the lifestyle. We create wealth. Real estate appreciates in value, and this is what you pass to future generations. And if you are to do a net worth assessment, you'll have cash, but real estate highly likely will contribute the highest. We have a proven track record. Next. That is Two Rivers. For those, anyway, I think most of us are aware of it. Sits on 100 acres. We have the mall and the residential bit and a theme park there. Anytime you're in Nairobi, you're welcome to enjoy the facility. That's the master plan when it's fully built. This could be a city in New York, it could be a city in Boston, it could be a city in Europe. The standards are the same. These are some of the projects. Some are under construction, some are complete. You can invest for as low as $250K, less than $2,000. Next. This is Vipingo for your holiday destination. Those are apartments. Carry on. So we have various categories of units, bungalows, mansionettes, serviced plots, and you build your home to your liking. There is an industrial component where we have various factories that are operational. People who work there stay in the residential bits, and that way you're able to make your rental income. Next. This is Uganda on the shores of Lake Victoria, a very nice mixed-use development. Kenyans can own property anywhere in the world, including Uganda, and it's one of the most beautiful destinations you can be. You can consider already home there. That's the master plan. The units also are in different categories, affordable all the way to high-end. And as I finish, of course, I have to remind you again to scan. I'm here to speak to you about any investment opportunities. Even I'm a Christian. The gospel has been preached every day from the rooftops for the last 2,000 years. So the last 15 minutes I have to repeat again. It's been repeated for several years. And I would be happy to answer one or two questions to see if my class was attentive. Thank you.
Question. Any question? Can you share your presentation center?
Yes, we'll share the presentation. On all the contacts I've gotten, we'll share the presentation. Yes.
No, what I was saying is probably, or at least some research shows that a lot of diasporas earn maybe between, I don't know, maybe 50,000 towards $60,000-$70,000 a year. So it means that the income that they can put away, if you're saving maybe 10% of that, probably is anywhere between approximately $500 to $1,000 every month. Do you have a product there? Because it seems a lot of them are more towards I'd probably need maybe 2,000, 3,000. Some of them I sold maybe like $5,000 a month. Do you have something that is in that range where a lot of Kenyans would be able to afford?
Yes, we do. And we have, just go to the slide on Kenya Mortgage Refinance. So we have products that are affordable. In fact, 70% of our units are in the affordable segment. I shared the high end for aspiration purposes, but you just are required to pay 10% deposit. So if you take a property that is let's say 2 million shillings, you pay 10% deposit, which is 200K, you can actually get mortgage financing from Kenya Mortgage Refinance Company, from any bank. The mortgage is, the rate is 9.5. Just go to the slide before. Okay. No, again. Yeah, so the mortgage is 9.5%. The interest rate fixed for 25 years. The tenor is 25 years. The maximum amount you can be financed is 10.5. So if I take a property that is 10.5 million, you need to pay 10% deposit, which is 1 million, which could be 2 years to pay that. And then you'll get mortgage financing. The repayment there will be 90,000 shillings per month when the unit is complete. The rental income from that house, plus your surplus cash, is adequate to finance that mortgage. These facilities are available for everyone in Kenya. And anyone who is a Kenyan can take advantage of this facility. So don't be afraid to take opportunity.
Makofi tena kwa Kenneth. Wow.
Simnaona, I told you our forums are unique, they are different, informative. So has Ken not answered your fears, your questions? Because during our trips here and there, one of the most feared, one of the areas that has questions really mingini, real estate. But he's told you, do your due diligence, and you have no reason to fear because there is somewhere you can get right. And he's educated us on how to mitigate risks, what to do, and you can still invest in the real estate in Kenya. Then you've seen our style. We've not just brought vibanda, maguta. No, it is information. Ama nimedanganya hapo. So unaona, you know now what to do and still comfortably, without fearing, invest back in Kenya's real estate. Where are you investing is told you how, and how are you mitigating the risk. So it's doable, it's possible. Ken is available. Can get his contact for follow-up. He's still around up to Wednesday, I think. Have one-on-one meetings with him, and he'll educate you more, and we'll share this slide to you. So this is the testament that our forums are really unique, and you get the right information, and you invest in the right projects. Sante sana, Ken. So, ladies and gentlemen, allow me, and we are really running late. So, we have 3 more presentations, and our guest of honor is ready to wait to have dinner with us. We'll come back, do the presentations, then have the keynote address. So all the presenters, I think, have had a word with you. We know how we'll do it. The next session will be really very nice. Community empowerment, mental health, as we wrap up after we've eaten enough to have those subjects coming. And we'll have the Abengo community also talking to us. And I want to appreciate Kelvin. Kevin or Kelvin? No, Bernard, sorry. Bernard, raise your hand, Bernard. Simama wakuone. So if Bernard is still here and he was the first one to arrive here, no sooner had we arrived with the banners, Bernard arrived at 1:30. So Bernard has been here from 1:30. So you wait, be like Bernard, and remember, you'll not get that voucher if you win and you've gone away. So kisha kula, turudi hapa tunongonezane, and there's so much. And then a polite reminder, so it's dinner, we want to enjoy dinner, and kindly, if you had not registered, kindly, you get time. You can eat and still register after. I know watu wa majusi tuko, sisi ni watu, sindio? Straight, yeah, hakuna hivi. So after dinner, if you're not registered, see Grace. If you don't have a raffle ticket, see Grace. So Grace, no, maybe you are busy. So I'll urge Alex Inyagwa, kindly, because I'm on the microphone, help us to support Balozi and Geoffrey so that we give them the honor to pick the food. I'm told it's buffet, so that's why. So it's a buffet. So kindly let's allow our chief guest, Alex, and this table. So let me say this table. This is the high table. So you are lucky if you are on this high table. So let the high table kindly pick the food, then the rest will follow. So Alex and Balozi, I'm supposed to be on the high table as well. Unfortunately, I'm holding the microphone. Yeah, asante Balozi. Join, high table. High table. Yeah, join. And then, yeah, so, see, mukobie, ama, situkobie. So enjoy your meal. We really appreciate you. We love you. I think the presentations have gone really well. We have 2 more realtors. Mudachi, you have a chance to speak after this. Sam, yeah, you have a chance after this. And then we will wind up with some presentations on our welfare. And you see, it's a great honor that Balozi flew from Washington, D.C. to come and be with us. Of all these forums we've done, we are honored to have had Balozi attend this one. Then he will be also with us in Washington, D.C. Patrick, you have something to say? Announcement? So I think you can follow.